Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Patreon.com/realmacro. Come down, like, follow, subscribe. We talk about a lot of things here, right? Stock trading, macroeconomics, the monetary system, you name it. But for this video to make sense to you, you gotta watch the previous videos where we talk about bonds, interest rates. We talk about money creation. We're going to talk some more about money creation today. We talk about Bitcoin, anything you can possibly imagine. But it's, I think, important for you to watch the previous videos before you watch this one, right? Good. So we're going to work it backwards today. We're going to go to the Bank of England and let them tell us how money is created. All right. All right. So we're going to focus on this part right here. Okay. Loans create deposits. Okay. It's not that the bank needs savings in order to make loans. Backwards. Loans create a deposit. And let's hear it, and then we'll come back. We'll talk a little bit about it.
Banks create additional broad money whenever they make a loan. Now, while this is nothing new, it is sometimes overlooked as the main way in which money is created. And it runs contrary to the view sometimes put forward that banks can only lend out deposits that they already have. In fact, loans create deposits, not the other way around.
All right. So let's listen to that again, one more time.
Sometimes put forward that banks can only lend out deposits that they already have. In fact, loans create deposits, not the other way around.
Okay. Loans create deposits, not the other way around. Good. So, what's the most important?
Your article was about how money gets created. We're surrounded here by gold in the vaults of the Bank of England.
What the fuck you doing over here? All right. So, what's the most important ingredient in creating a loan? Creditworthy borrower. There you go. You heard it, right from the horse's mouth. You can't have a loan without a creditworthy borrower, and that creditworthy borrower must be willing to take the loan. Okay. Once that loan is approved and the two parties agree, then it's going to create a deposit. It's going to go in your bank account, right? So, yes, the bank just keystrokes some digits into your bank account, but you need to fund the loan first. How do you fund it? Well, you got to be creditworthy. Okay? That means you got to have a job, credit history. What are you putting up for collateral? Is it secure, unsecured loan? Right? You need to be able to prove that you can fund the loan before anybody's going to give you a penny. Okay? If you worked, well, you have bank deposits. Okay? You still got to sign that it's you, prove it that you did work for it, and you can receive that money. Right? Nobody's going to give you money just because you look good. You have a lot of people out there on social media saying that the government just issues money willy-nilly, just prints them up and just passes them out like candy. No. No dollar can ever exist unless you, in the private sector, can fund that loan, okay, or deposit with your work. Okay, you got to fund those dollars before they can come into existence. That means you take it from the start, okay, that the government cannot tax something that does not exist. Okay, you just can't do it. So when you think of it like this, the proper way, all money is funded. Now, when you spend that money, you're going to get something in return, right? It could be a car, it could be a house, whatever. But once you spend it, it becomes income, profit, savings to somebody else. Okay? Income, profit, savings to somebody else. Now, for that person to acquire those dollars, they have to give you something. Again, you can see that the dollar is fully funded and valued prior to receiving them. Nobody's going to give you dollars just because the government issued them. And here you go, everybody, I'm sprinkling you with dollars. If that was the case, give me a few hundred bill. Okay? I need a few $100 billion. It's not the way. Nobody would work. if the government could just fund us by issuing money, why go to work? Just sit home. Okay. Getting back to the core of it, right? From the foundation of it. If a creditworthy borrower cannot take a loan and cannot create a deposit, okay, and spends it, then the government cannot tax it. So you might hear another crazy idea that the government merely imposing taxes makes you want to go out and use the dollar. That's what values it. No, because the dollar cannot exist unless the creditworthy borrower takes a loan that creates a deposit. And then a dollar can exist the moment you spend it. So you can't tax what doesn't exist. So, I came up with a little joke. I said, well, I bought an island and I told the residents that I'm going to fund them by issuing, Nick coins. And they were all excited. They were cheering, like, yeah, they're going to fund us money. Yep, that's right. But all you got to do is give me 25% of what you make every year. And they told me to go fuck myself. And then what? Nobody used it, and that was the end of that. The end of the story. It doesn't make sense, but you will have people on social media convincing other people that this is the way it works. Absolute insanity. So, now, in the next video, I want to talk a little bit about fractional reserve lending. Okay? Basically, what it means is that banks have to have deposits before they can lend. Okay? It's the opposite of what the Bank of England and every other central bank in the world would tell you the same thing, that it's first deposits, then loans, where today the reality is it's loans versus deposits. Okay? So in the next video, I'm going to explain the difference between the two ideas, if there are any differences. Okay? So make sure you click like, subscribe, follow along, come down, and we'll talk more about money. All right. Take care. Talk to you guys soon. Bye-bye. Oh, God.